welcome everybody to the Texas REIAs, the largest network of real estate investor associations in the great state of Texas. With over 150,000 members, participants, and attendees going back to 2003, Texas REIAs provides all kinds of resources for real estate investors and people that want to be real estate investors. And these resources include money and power teams and training and market data. We're actually going to start tonight with a market update, tell you what's going on in the real estate market right now. So, quick question, let's make this a little interaction. What's the probably biggest story about real estate over the last couple of years? What's changed in the market? What's the change? What is it? Interest rates. What happened to interest rates? They went up. Okay, interest rates went up. Okay, so they're different than they were before. So let's do a poll of the audience. I'm going to give you a couple choices. Choose A, B, and I just want your opinions. And now opinions can't be wrong, so I want everybody's opinion. And because opinions can't be wrong, there's no right or wrong. You should all be happy to give your opinion. So what do you think? Do you think interest rates are high? Do you think interest rates are low? Let's do a poll of the audience. Who thinks interest rates are kind of high right now? Raise your hand if you think interest rates are kind of high right now. Okay, who thinks interest rates are kind of low right now? Okay, so there was two choices, high and low, right? So high or low, what do you think, high or low? Okay, actually you picked option 3, I like that, option 3. I actually like option 3, I agree with you. My opinion, interest rates are normal. That's my opinion, right? Now, it's perspective, everything is about perspective. Okay, I have been investing in real estate for 21 years. The smartest thing I ever did in my life is I bought a whole bunch of houses in Austin, mostly downtown, and I paid ridiculous prices. 21 years ago, I bought these houses. The market was very high. I was buying houses. And so most of the houses I bought downtown cost, I don't know, $120,000, some cost like $150,000. I think in some of these, I might have paid like up to $180,000. I didn't know for a house. I know it's ridiculous, right? But I was paying ridiculous prices. And, and most of them I still own to this day, and most of them have mortgages at 6.5% to 7% interest, which by all historical measures is normal. Now, a few years ago, interest rates got down to 3%, okay? Now, that was not normal, okay? That was not normal. Before that, prior to a couple of years ago, when before that did interest rates get down to 3%? Anybody know? When? Yeah, that would be never. Like never in your parents' lifetime, your grandparents' lifetime, or your great-great-great-great-great-grandparents' lifetime. Never happened before in the history of the universe. So that was abnormal. Now, personally, I like normal over abnormal, okay? I really do. Because like when things are abnormal things happen, it's hard, I don't like abnormal. I'll give you an example. I do both residential and I do commercial. When you do commercial, a commercial flip, syndication flip, is typically a 5-year deal. You buy it and then you typically sell it 5 years later. Now, what was going on a few years ago is like multifamily, one of the many assets we invest in, hyper competitive a few years ago. So people were paying top dollar, right? And they're getting them financed with 3% mortgages. And, even paying top dollar, right? If you got a 3% mortgage, you could still collect enough rent to pay the mortgage. But now all those loans are coming due. Commercial loans are not 30-year loans. Commercial loans tend to be like 5-year loans, right? So the loans are coming due, and now they're trying to sell these properties, right? And even if they sell them at the same price they bought them for, right? If you bought them at the same price and you got a 7 or 6.5 or whatever percent mortgage, you can't generate enough income rent to pay the mortgage. So a lot of those deals are going bad, right? And that's just kind of what happens. If a deal only works at 3%, if a deal only works in a market that never existed before in the history of the world, right, what are the odds that's going to continue, right? When you buy commercial real estate, for example, the question you have to ask is, what's the world going to look like in 5 years when I go to sell this, right? And I don't think it was reasonable to expect something that had never happened in the history of the world to continue to happen. That's not a reasonable assumption. Right now, interest rates are 6.5%, right? If you're doing commercial loans, give or take. And if you're buying a commercial property, you got to ask yourself a question. Do you think in 5 years that interest rates are going to be probably about where they are now, maybe even a little less? I think that's a pretty safe bet, right? And so I like safe bets, right? I don't like to invest in dangerous bets. So let's get another opinion poll going here. Houses. What do you think? Do you think houses are expensive right now, or do you think they're cheap right now? Let's do a poll of the audience. Who thinks houses are kind of expensive right now? Raise your hand if you think houses are kind of expensive right now. Who thinks houses are cheap right now? Cheap right now. And again, you only have two options. You can't be wrong, okay? So I'm going to push you guys over here on the right. What do you think? You think houses are expensive, or do you think houses are cheap? What do you guys think? Expensive?
Houses are down right now.
Right? Or houses are cheap? Cheap? Expensive? Got a lot of expenses, a few cheaps. Okay, my opinion, I do have an opinion, a strong opinion. I think houses are freaking dirt cheap. I can't believe how cheap these houses are. They're practically giving these houses away. I mean, these houses are freaking on sale. And if you don't believe me, agree with me, don't listen to me. Here's what I want you to ask somebody that I know you trust. I want you to go to somebody that I know you trust more than probably anybody else on the planet. And I want you to ask their opinion, because I know you're going to listen to them, even if you don't listen to me. And I want to ask them, what do you think? Do you think houses are cheap? Do you think I should buy a bunch of houses right now? Or do you think they're kind of expensive right now? Okay, so who should you ask? I want you to ask future you, okay? Ask yourself, future you, 20 years in the future, what do you think of house prices back in 2024? And do you know what future you is going to tell you? I guarantee you they're going to say, oh my God, do you realize you could have bought a house in Austin, Texas for less than $3 million? You should have bought them all. Yeah, I've been doing this for 21 years, and I'm going to tell you every year for 21 years, people say the same thing. Oh, houses are so expensive. Because they're always comparing them to what they were 3 to 5 years ago, right? And in 20 years, you're going to compare them to what they were 3 to 5 years ago, and you're going to compare them to what they were 20 years ago. I bought a whole bunch of houses at ridiculously expensive prices, right downtown. $120,000, $150,000, right? Some I paid as much as $180,000. Today, those houses are worth $570,000, $780,000. One of them's worth $1.2 million. Okay, one of them went up 10x. Okay, and in 20 years, the prices today, 20 years from now, you look back, it's going to be the exact same thing as looking today. 20 years ago. It's the same thing, guys. Yeah, there's little cycles, but for the most part, dollar cost average is the same, right? So that's perspective. It's just perspective. You have a different perspective if you've been doing this for a long time than for a short time. If you only paid attention for the last few years, you're like, oh, houses are expensive, right? If you've been paying for 20 years, you're like, no, actually they're cheap, right? And that's perspective. Now getting back to interest rates. Let's talk about interest rates. When interest rates go up, what happens to home prices? What do you think? Do you think they go up, or do you think they go down? Let's do a poll. Opinion can't be wrong. Who thinks when interest rates go up, home prices go down? Who thinks when interest rates go up, home prices go down? Who thinks when interest rates go up, home prices go up? Okay, we got a lot of downs and a couple of ups. Okay, they actually do this. I'm going to tell you something. Real estate does not care about interest rates. Real estate cares about two things, supply and demand. That's all it cares about, supply and demand. Okay, so in as much as interest rates affect supply and demand, yes, it will affect real estate prices. So for sure, when interest rates go up, houses are more expensive, mortgages are more expensive, right? They're more expensive, and when they're more expensive, right, the mortgage is more expensive, the demand goes down. So yes, when interest rates go up, it reduces the demand, which pushes prices down. But there are some offsetting forces that are really interesting. Why did they raise interest rates? To combat what? Inflation. What's another word for inflation? You know, I hear people talk about inflation. They always talk about it like it's this bad thing. We have to whip inflation and get inflation under control. You know, like this inflation thing is just this terrible, terrible thing. Personally, I disagree. I love inflation. Oh man, I go to bed hoping for more inflation. I just have another name for it. You know what I call it? I call it appreciation. the same thing, guys. When there's inflation, where do you want your wealth? In not money, in other stuff, in physical stuff, things like gold, things like real estate, right? Real estate, when there's inflation, it means the cost of physical stuff goes up, way up. How many of you have owned a house for the last 3 years? Who's owned a house for the last? Oh, nice, you're a lot richer than you were 3 years ago. What if you had 20? What if you had 100? Can't go back, can you? Go anything you want going forward. When's the best time to plant a tree? 20 years ago. When's the second best time to plant a tree? That would be now. That would be now. You are planting trees right now that you will harvest 20 years from now. Right? That's the thing. So yeah, inflation is what makes prices go up. So that's an up. Right? What else does interest rates do? Here's another interesting thing. Right now, normally, talk about normal, when you look at houses for sale, the MLS, normally 2/3 of the houses for sale are resale houses and 1/3 are new construction. That's the typical normal mix. Right now it's inverted. Right now it's 2/3 new construction, only 1/3 resale. Nobody's selling their house. It doesn't make any sense. The economy is not bad, people have jobs. People should be saying, honey, let's buy a bigger, nicer house. But they're not. Why is nobody putting their house for sale? Because they got one of those 3% mortgages and they don't want to give it up. So all of that inventory is being held off the market. And when you don't have enough inventory on the market, right, that pushes prices up. So inflation is pushing prices up, right? Holding supply off the market is pushing prices up, right? We also have something where the banks haven't made it easy to lend. Up until 2008, it was easy to lend. Then the banks went bankrupt and it became hard to get loans. Money got cheap, but it didn't get easy. And consequently, builders for years have not been keeping up with the demand. But people keep having babies and people keep moving to Texas, but we don't have enough houses. In fact, I don't know how many of you have heard this. We are in the middle of a national housing shortage. Who of you have heard of this? Yeah, we have 6 million fewer houses than we need for all the people that need a place to live, right? And when you have not enough supply, what does that do to home prices? Pushes up. So we have things pushing down and we have things pushing up, right? So it's not as simple as to say interest rates went up, home prices went down, right? They have up and down. This is an interesting chart, just to give you some perspective. This is interest rates versus median home prices going back to 1970. From 1970 up until let me go back and show that again. From 1970 to 1981, interest rates on mortgages got all the way up to 18%. So anybody complaining about 6 or 7% mortgages, how about 18%? And here's the really interesting part. When interest rates went up, what happened to home prices? They actually went up. And when interest rates came down, what happened to home prices? They went up some more. And when interest rates went up and down, up and down, and up and down, home prices continued to go up. Now we had some bubbles. Here's that bubble. Remember that big bubble, 8, 9, 10, right? Some little bubbles. But it's not so simple to say there's like this direct correlation between interest rates and home prices. It's not direct as well. So there's things pushing the market up, there's things pushing the market down, and when you put all that in a blender and you push go, what is the result? The market is flat. That's where the market is. Now the volume's down a little bit. We'll talk about the volume. Less buyers for sure, but there's also less sellers. When you have less buyers, that pushes prices down. Less sellers, that pushes prices up. When they offset each other, prices go flat. So I'll give you some data. The average, this is Texas Roundup. The average price house in Texas, $425,000, up 1% year over year. It's flat. Hasn't done anything for a year. Median price, $340,000, flat year over year. Now, the most important data point on this slide is this one right here in the middle, months of inventory. What is months of inventory? If you really want to know kind of where the market is and where it's going, look at inventory. How do you describe months of inventory? How would you define that? Here's how you describe months of inventory, define it. If you took all the houses in the MLS, all the houses for sale, and you stopped adding any more houses for sale. We're not going to add any more. We're going to take what we got and we're going to sell what we got, not add any more. The question is, how long would it last? How long before we're out? How long until the shelves are empty, until the last house gets bought? And the answer is 4.8 months of inventory, which also happens to be the average amount of time it takes to sell one house. The average amount of time it takes to sell one house is 4.8 months. Now, that's average. What does that mean? Some houses take a lot longer, some houses take a lot less, but the average is 4.8. Now, let's put that into perspective. They say if there's less than 6 months of inventory, you have a seller's market. If there's more than 6 months of inventory, you have a buyer's market. If there's right around 6 months of inventory, you have a neutral market. We're in the middle of a seller's market. People are like, oh, the market's down. Well, yeah, compared to a year ago there was 3.5 months of inventory. We had a hot seller's market. Now we have a seller's market that's not a hot seller's market, but it's still a seller's market. We're not anywhere near a buyer's market. So that's just some perspective. And again, people are like, oh, the market's slow. Well, compared to a year ago, it's slow, but by any historic standards, we're still in a seller's market. Now, the number of listings is up. That's why there's more inventory than there was a year ago. Let's look at some history. 2021, prices went up 18% in 1 year. 2022, they went up another 10% in 1 year. 2023, flat. So it went way up, went up some more, and then it just flattened out. Didn't go up, didn't go down, just kind of bounced along, right? So I'll break into some of the different cities. Houston, average price house in Houston, 422, up 0.9%, basically, it's flat. Median price home in Houston down 0.3%, basically flat, 337,000. Months of inventory, 4.5 months of inventory, about similar to the state. What happened in Houston? 2021 went up 16%, 2022 went up 10%, 2023 flat. Very similar to Texas. Lease prices in Houston are up a little bit. When leases are up, what does that mean? Are the apartment buildings full or the apartment buildings empty? They're full. Yeah, they're full. If they're empty, the prices go down, right? When the prices are going up, it means they're not hungry, right? So the apartments are full. Okay, Dallas, big D. Average price house in Dallas, $510,000. Second most expensive major city in Texas, flat. 405 is the median price, flat. Months of inventory, 4 months of inventory. Dallas is the hottest market in Texas. Now, I'll tell you something that's not as hot as it was a year ago. A year ago, it had 2.7 months of inventory. But it's still the hottest and best market in Texas. And I don't know why this is the case, but we've been tracking this for 20 years. For some reason, for 20 years, Dallas has always been the bellwether of Texas. If you kind of want to know what's going to happen next, look at Dallas. I don't know why, but it's just always been kind of the bellwether of Texas. History, 2021, prices went up 20%, 2022 up another 15%, 2023 flat, up 1%, which we say is flat. Leases are flat, so that's Dallas. And then we have Austin. Couldn't miss out on Austin. The average price house in Austin is $573,000. That's the average. And we did a little research to better understand this. It turns out Austin, in case you're curious, like where'd the name Austin come from? It's actually Latin for San Francisco, yeah. Elon Musk moved to Austin, and Samsung and Apple and Amazon and Meta and all these high-tech companies brought all their high-tech engineers and high-tech employees, and things have gone crazy here in Austin. Down 0.6%, median price $435, down 4.3%, months of inventory 4.7. Now, Austin's an outlier, and I'm going to tell you why. In 2021, in Austin, Texas, prices went up 29% in 1 year. 29% in 1 year. And I was there. And it was so crazy in Austin, Texas in 2021, somebody would put a house on the market for sale. There was 0.4 months of inventory, less than 2 weeks of inventory. Never saw anything like it. In fact, it was so insane that somebody would put a house for the market in 2021, they get 11 offers in a weekend. 1 would win, 10 would lose. So the 10 that lost, they'd put an offer on a second house. They got 10 offers in a weekend. 1 would win, 10 would lose. And then after losing the second time, they got so angry, they started screaming at their realtors, what's wrong with you? You're giving me bad advice. I keep getting outbid. I need a place to live. What do you got to do to buy a house around here? Yada, yada, yada. And it became so crazy that in that unusual, never happened before market of 2021, it was normal in that abnormal market for people in Austin to buy houses at 5 to 10% above appraised value. Do you know the bank will not allow you to buy a house above appraised value? The total down payment and the total loan cannot exceed, even by $1, the appraised value. If you want to buy a house for more than the house appraises for, you have to put the down payment down, you got to get all the bank money, and then you got to come up with a big pile of money to put on top of all that after the fact, right? And in 2021, it became normal for people to do that, 5 to 10% above appraised value. Now, in 2022, didn't get much better, went up another 10%, 2023 went down 8%. So most of Texas went up 30% and flattened out. Austin went up 40%, came down 10%, and flattened out. What's the difference? I guess it just depends on when you bought a house, right? If you bought a house, right, in 2022, you went down 10%. If you bought a house 3 years ago, it went up 30%, right? And that's just perspective. And then we have San Antonio, the most affordable major city in Texas. Average price $372, down 3%. Average price, median price $314, down 2%. 5.3 months of inventory. It has a less high-tech economy, I guess you could say. And the history, 2021 up 16%, 2022 up 12%, 2023 down 2%, basically flat. So where are we going? What is the forecast? And what's driving the market? And I do want to say, I should have said this before, all of this data, I didn't create the forecast, I'm just reporting the forecast, number one. Number two, all of this data comes from the Texas A&M School of Real Estate and a number of online resources, so it's not our data, we just report the data. I will give you our forecast in a minute. And then number three, we don't have any motivation here, okay? There's groups out there that always, they're trying to sell you something or they're trying to sell you an idea. Like the National Board of Realtors, they always give you a forecast and the market's always going up. Every year, for 100 years, it's like next year it's gonna go up, right? They always tell you that. If we think the market's going up, we're gonna tell you it's going up. If we think it's going down, we're gonna say we think it's going down. If we think it's gonna go flat or sideways, we say we think it's gonna go sideways. Because we have made money. We have strategies to make money in up markets and down markets and sideways markets, but you have to be a student of the market. So you need to have data. So let's take a look at what's driving the market. First, we have the economy. Overall, the economy is doing pretty well. Now, real estate doesn't care about the economy directly. It cares about it indirectly. If the economy is doing badly, people are a little less likely to buy real estate. But it's not a direct correlation. During the Great Depression, real estate prices went down a whopping 6%. Nothing. During the Great Pandemic, another 1 in a 100-year thing, real estate prices went up 30%. So it's not a direct correlation for sure. Consumer confidence is measured on a 0 to 200 scale. You know, people score over 100, they're confident, under 100, they're scared. Right now, consumer confidence is at 103, right in the middle, a little over the middle, right? So people are a tiny bit confident, they're not scared. Unemployment, solid. We have great unemployment. Everybody's got jobs. If they have jobs, you're a little more likely to buy real estate. Job growth, solid, especially here in Texas. We're growing lots of jobs, and it's a great economy. When people have a job, they're a little more likely to buy real estate. The stock market, and again, real estate doesn't care about the stock market other than indirectly. If people look at their 401k and it went up, they feel wealthier. When they feel wealthier, they're a little more likely to buy real estate. So we had a very strong year last year. And then interest rates. Interest rates went up, and that pushes prices down. So we got some things pushing up, we got things pushing down. House price trajectory is flat, pushing sideways. Closed sale trajectory down a little bit, but it's starting to turn. Pending sales trajectory is flat. Active listings, yeah, we're adding more listings, but we're just keeping up with the demand, so it's not really pushing up or down. Months of inventory is pretty good. You know, we're in a seller's market, 4.7 months of inventory, so that's a positive push. Housing permits, yes, we're building more houses, but money is not the easy thing to come by, so we're not really keeping up with demand. And speaking of demand, this is a big bullet. You know, all of these are not the same size. They're the same size font, but truthfully, some should be great big bullets and some should be little tiny bullets. This should be the biggest bullet on the page, migration. What is migration? The ratio of people moving in versus people moving out, because that's directly impacting demand. So last year, California lost 500,000 people. Last year, Texas gained 500,000 people. Where do you think they went? Yeah. And then there's another 15 million people where we don't really know where any of them went, but I bet a bunch of them are in Texas too. So we're getting a lot of migration. And all of those people need a place to live, right? So they need a house or an apartment to live in. So there's a huge influx, specifically in Texas, of migration. Construction labor, you know, this is another factor. Contractors, they're aging out. They're getting older. They're dying off. The average general contractor is like 58 years old, and they keep getting older, right? And they're not being replaced. So if you have a teenager, don't send them to college. Buy them a hammer. And I'm serious, right? Contractors make way more than college graduates. You know that. The world has changed. It used to be like I went to college. My parents went to college. Now I have a teenager, I don't know if I care if he goes to college. Gets a bunch of student debt, works for some jerk, you know, in a crappy job, or you could work for yourself and make 4 times as much money or twice as much money as a general contractor, right? I was reading this article about this surgeon, and his toilet broke, so he had to hire a plumber, right, to come fix the toilet. The plumber fixes the toilet, gives the guy a bill, and the guy's looking at the bill like, oh my God, this is ridiculous. This is the kind of a price a surgeon might charge. The guy's like, yeah, I used to be a surgeon. Yeah. Seriously, guys, give your kid a hammer, make him a contractor, right? And they're making a fortune, and the materials are expensive. So I used to be able to build houses for 100 a foot, and then it was like 120 a foot, and then 150 a foot, and then it's like 180 a foot, and then it's like 200, 220 a foot, and I'm paying up to $300 a foot, right, to build houses now because of all the labor and materials. And then there's a couple of wild cards. You know, what's going to happen next with interest rates? We don't know for sure, right? And I hear there's an election going on, and there's a couple of wars going around as well. So our forecast is this. That was probably it. If you're expecting some big correction, if you're expecting some big market bottom, that was probably it, folks. Didn't do much. Just went up a bunch more, and then it just flattened out and putzed along there. In Austin, there was a little bit of a correction, and then it flattened out again. Now it's starting to creep up again. So we don't really see much at all that's pushing the market big up or big down. We do expect interest rates to continue to decrease. The Federal Reserve has said that is their plan, right? They just decreased interest rates, and they tell us they're going to continue to decrease interest rates for the rest of the year. That should modestly juice the market. So that's going to be the final thing that is kind of holding the market back a little bit. We expect sales to gradually increase, but bottom line, we expect prices to be up maybe 2% by the end of the year. In other words, not a whole lot is going to happen. It's not expected to go up. It's not expected to go down. It's basically expected to go sideways. So if you'd like copies of these presentations, we do post them on our social media. Any questions? Was that helpful for you guys? Yeah. Any questions about that? Okay. So let's do a poll of the audience. No right or wrong. Who thinks prices are probably going to start going up? Who thinks prices are probably going to start going up? Who thinks prices are probably going to start going down? Okay. All right. No right or wrong.